Welcome to MyStockScanner Live on a Tuesday, powered by the 3-Point Playbook. We cut through the noise, break down the numbers, and test every stock with three simple questions. Does it have a quality? Does it have an upside? And does it have timing? Hans-Henrik, Nielsen, Liam Flavelle are ready. Hans-Henrik, I'll start with you because yesterday was a little bit of a volatile day in especially the US stock exchange, but it ended up being a plus. Surprised by that?
Yeah, first of all, the index didn't move much, but there was a lot of movement under the surface, and we were not too surprised. It was basically what we predicted. So maybe a bit surprised that it wasn't just a bit negative.
Liam, I know your focus was probably not on the east coast of the US, more towards Las Vegas, not because you're a gambler, but because there's the Consumer Electronics Fair, big fair there, and Jensen Young flashed a new leather jacket. But was there any other surprises?
Oh, no one cares about Jensen Young. They've brought out Lego with a computer in it. It's fantastic. The seven-year-old me would have been on a plane already over there just to see if I could steal some.
We will be talking about Jensen Young no matter what. Maybe not the fashion part of it, but we will start, we will start with the headlines. Venezuela is back in focus, even though that there's not much news to talk to today. But already the speculations about rebuilding the oil industry that is going to cost more than $100 billion is making headlines. As said, it's a volatile market yesterday. Big movers, but we put it all through the 3-Point Playbook and talk about it. And then we take a look to Novo Nordic versus Eli Lilly, as Novo is on a tear again today, 5.3% up. Yesterday it was 5%. And then, as said, we take a look at the AI battle, NVIDIA versus AMD at the Consumer Electronics Fair in Las Vegas. And then we have the Tuesday poll results. In other words, we have a busy schedule, and we also launch a new Tuesday poll. The number of the day, 75.6%. You get to know what that's all about at the end of the show. But let's start on the world scene. Let's start at the macro side of business. Venezuela is, of course, still in the headlines. A lot of people were looking towards investing in Venezuela. And Hans-Henrik and Liam, you both said, I'll start with you, Hans-Henrik. You said, not so fast. Take it easy.
Yeah, we made an article yesterday. There was a kind of a hype about buy Chevron, buy ExxonMobil, buy all these oil companies. And he said, if you are going to go in there, don't use the big ones. Use the ones that supplies material. I also wrote that I think it will be a massive failure. I don't think they'll make a cent from Venezuela oil.
And that has something to do with how much it takes to extract the oil, that it's a very expensive process.
It costs a fortune, and Venezuela is completely collapsed. So they have to build new electrical grid, roads, harbors, new oil wells, everything. And Trump said that is on the oil companies. They'll have to fund all of this. And there is a razor thin margin of the Venezuelan, this heavy crude oil, and it'll take them, I don't know, 150 years to make those money back. They are not interested in going in there, I can promise you.
But Liam, a day like that, like yesterday, is where we take a look at our 3-Point Playbook portfolio and we kind of go, there's a lot of things moving around here. We got big pluses, big minuses. That's where you as an investor try to sit on your hands because you really want to pull that trigger, don't you?
You do, and that's why we have a strategy. That's why there are rules in place to say we only come out of things when actually the strategy tells us to. So we don't have those knee-jerk reactions. We had quite a lot of movement yesterday. We had one company, I'll show you in a sec, was up 5%. We had another couple of stocks up 3-4%. We had one down 3%. So yeah, lots and lots of movement in there.
But again, as you say, it's all about the strategy, and that is that you don't react on the news. Basically, you wait on the news to settle in, and then you take a reaction. But if we look at one of the stocks in our portfolio, I know there's one that you want to bring up, which is AMG. Maybe doesn't say a lot to a lot of people. They probably don't even know it.
It's like I say, the one thing I really enjoy is investing in boring companies. This is a stock that we invested in a few months ago. It's given us almost 20% returns in that time. So it's about an average gainer for us, just below an average gainer actually. Let's look at it. It's tied to the investment industry, so it's in the financial side of things. But if we just go through it as a playbook stock very quickly, the playbook, 3-point playbook, asks us 3 questions. Is it a quality stock? Is it undervalued, so there's upside to it? And is it a good time to buy? Where the platform is where we do this. You could use it anyway. We're not doing anything that's rocket science here. We're saying let's buy decent quality stocks that are cheap, that look like they're going to go up sometime soon. But we just have those rules and framework around it. The system gives us this nice dashboard for the first question, and you basically look, is most of it green, especially these key areas. The quality score is out of 100. That tells us that 87 out of 100 is fantastic. The earnings per share, you can see in the future, these golden sections here are going up quite dramatically, and also the PEG ratio is below 2.5. That says, that's how much growth is already baked into the figures. Everything else seems to be pretty good. The analysts have increased their estimates recently. They like it. The return on equity and free cash flow is pretty good. Everything looks good from a quality point of view. So that's a big tick in the box for the first question. On the second question, AMG, where's it going? Is it undervalued? Is it overvalued? If I just sort of, you can see this golden line here as the analyst, this is what they think is going to happen. So if I just bring sort of the lines down, maybe somewhere around here, we can see that when we went into it back a couple of months ago around here, we identified quite correctly that there was a bit of a change coming and the stock was going to shoot up.
I'm gonna ask you a question, Liam, because you moved around the lines. There is sort of an automatic once you take a look at the stock, and then you should tweak it yourself to tops and bottoms and stuff like that.
So the system automatically tries to line up with some basic numbers. It does a fairly good job most of the time, but it's not perfect. And actually, it's something that I would never actually use just off the back of it. It really gives me an indication of where the stock is. So I will, I just reset it and I'm just moving the numbers down. So they sort of match the historical ups and downs of the stock. So you can see here, I might try and match it to this particular peak a few months ago. So here you can see if this was true, then you'd still have 34% upside in the best case. And maybe 7% is what we're actually thinking might happen, and a drop of 3% if we're wrong. The analysts think it's 12%. So actually, there's still some more gas in the tank for AMG, which is why we haven't sold it. And then on the third point, we basically look for, is now the time to buy? And also from a technical point of view, when do we come out? The key lines here are the 50-day moving average, which is the average of the last 50-day closing prices for the stock. That's this green line here, and the 200-day. It's the same maths. It's just 200 days rather than 50. And also we've got our MTIs, which is our momentum index, that says from a daily range and from a weekly range, everything looks good because it's green. So here we can see, this big candle here. The stock shot up yesterday. That's great. But it's basically, it's used the 50 to go all the way up in this channel. As soon as it breaks the 50 and maybe meaningfully sort of looks like it's not going to come back, that's when we look to sell.
And that's when we use the cushion that we built, the 20% that you mentioned, to not lose our money. So we basically just crawl along the line and then we get out in time.
And the important thing to note here is that we get asked all the time, how do we know when to get out when it's the top? We don't know when it's the top. We never get in at the bottom. We never get out at the top. We're always going to be sort of using up some of that spare capital we've got in there just for the tops and the bottoms.
And again, it gives a good night's sleep to know that you have a strategy in place, when to get in, when to get out. We change directions in that sense that we go to Denmark for a stock that was on a tear yesterday, 5% up. Denmark was almost celebrating and bringing out the fireworks for New Year's that was left over, because the stock is also going up 5.2% today. Hans-Henrik, we talked about a couple of months ago almost, and then we repeated that they needed a momentum shift for Novo, where they kind of, the way they interpreted, or at least the investors interpreted the news, and Novo came out and said, we're going to do advertising for our new product. And that was enough, wasn't
it? As you say, it's we know Novo. We have looked at it 100 times by now, but yes, it came out yesterday, and to everyone's big surprise, they have their new product, and they said we're going to market it. And people went shocked and said, let's send the stock up 5%. That's a bit ironic, of course. But the thing is that Novo Nordisk have been in a really big downturn. It's wrong to say we called it up here, but we said that when it was up here and the PE was around 45-ish, we went out of the stock and said it is priced for perfection, meaning that it takes almost no bad news, just a mediocre good news to send it down. We are kind of in the opposite space right now, where a news event like we're going to market this new pill sends the market up by 5% yesterday and 5% today. That is a bit of the inverted price for perfection. I don't know what that is called.
Priced as a bucket of crap.
Yeah.
Always ask Liam for the limerick. You know
As you said, we have said for a while that it was kind of, there was a feel in the market that this could be the bottom. It's always hard to say with Novo after such a downturn, and we have said for a while we are looking for this 200-day moving average to crawl slowly down, and when the stock can move above it and kind of grow, be fixed up there, then we'll be looking for a buy.
And interestingly enough, their biggest competitor, Eli Lilly, they went down yesterday. Was that sort of the reaction to the good news from Novo's bad news for Eli Lilly?
I think the Eli Lilly investors said, "Oh no, are Novo going to market their products?" And then they saw. No, as you can tell, I'm making a bit fun of the markets because it's almost never rational. It always comes up with weird explanations to buy and sell. And what we're looking for is, for instance, with the Novo stock, is it too cheap? Are investors looking for excuses to buy or excuses to sell? And that is where we jump on or off the wagon.
And yesterday they had an excuse to sell Eli Lilly and probably take some of their profits.
Yeah.
Another thing that can move the market is when there's these big consumer fairs, or that Jensen Jung takes the stage and show off a new leather jackets. Then normally the reaction in the market and sometimes in the aftermarket is spot on. It takes off, it does things. And yesterday, both the CEO of NVIDIA and the CEO of AMD took the stage in Las Vegas. But Liam, there was no bump in the aftermarket, basically quiet. What happened?
There wasn't. It's an interesting one. Why didn't they have a bump? I think it's because people still don't trust the numbers. When you look at the other chip manufacturers, Lam Research and companies like that, they were all up 3, 4, 5, 6%. So there's a big push towards people looking at other parts of the chip industry to say, are they going to overtake it? There's a company called Furiosa that came out. They're looking to go, I think they are probably, but they're mass producing their chips, which are supposed to be 5 to 10 times more efficient than the NVIDIA chips for training. But if we actually look at the numbers and look at the companies themselves, then we can see that actually, if we look at NVIDIA very quickly, I won't go through a full 3-point playbook. Trust me, it's a good quality company. But here we can see actually it's looking pretty good from a value point of view. Just on these numbers, based on the PE ratios we put in, which historically, where they've been average of 68 over the last 5 years, average of 53 over the last 10 years, and we're sitting at 40 is what we expect, and that would give us a 60% upside. Would we buy it right now? It's hovering around its 50-day. It's not really going anywhere, and it hasn't really gone anywhere for 4 months now. So it really needs a catalyst. And we talked about this in the members group over the weekend. I think Stefan Holbrandt put a post up about it. And it's basically, we need that catalyst, and we need some other big buyers start coming in and saying, okay, we're gonna start buying this stuff. What they did come out with at CES was their Vera Rubin chips, which they've been talking about for ages. They're 4 times more efficient than the current chips that they've got. That's going to be a big thing. But it's not news. It's almost, let's sell the news because the rumor's not there anymore. So now it's come out,
and it's not Lego.
It's certainly not Lego. It's not as interesting as that. They've got Star Wars sort of kit now with Lego processors in it. But
I should have started this.
Yeah, I was going to say.
Let's take a look at AMD instead.
Yeah, if we look at AMD, much more boring, but similar sort of story to NVIDIA. They're positioning themselves as a competitor. They have a new chip that is supposed to be up to 1,000 times more efficient than their old one, the MI300s out there. That's supposition at the moment. They haven't actually got the chip yet, but they're thinking it's going to be that quick. When you look at their value chart again, we're basing their value at a PE of 55, which for the last 10 years they've been at 103 on average. So we're not really pushing the boat out on this, and we're seeing even better potentials than NVIDIA there for the drop. And in TradingView, they've suffered a bit. They're just poking. They hit their 50-day and then went back down, which isn't a great sign. So again, I would really wait, and we say it again and again and again. Wait for the stock to go up, come back down, test that area, and then start shooting up again. And that's when we know that the trend is probably in place to start going up a bit more.
But there definitely is no secret. These are two stocks that we have our binoculars on and taking a look at.
Definitely. NVIDIA will be the winner this year. There is no doubt about it. It's just how much people believe that and how much PE they're willing to pay. AMD will be playing catch up, but still a very, very good quality stock.
And we're talking sectors here in that sense. That's the tech sector that we're talking about. And we asked our members and people who pass by in AktieSnack and Aktieanalyse about sectors and what sectors they believe in here in 2026. That was Tuesday poll from last week. I took in the numbers this morning, and I can tell you, in AktieSnack, the winner was tech. 27% believe that the tech industry will be a winner in 2026. Health was number 2, 21%. Aktieanalyse, that's where you go after AktieSnack and become a little more nerdy, maybe not full nerd. What's this?
Semi-nerd.
Semi-nerds. They believed in energy, 23%, tech on second place in 19%. And then when you go full nerd, that's the members, that's people who pay for our platform and to use all the tools that we have at our availability. And a new one that we're going to show you just in a little bit. It's not ready yet. It's almost like a Consumer Electronics Fair now that we are teasing something coming in the near future. But in the members side, materials, 25%, and health was 19%. What to make of this in that sense that, are they wrong? Are they right? Is that what we believe in 26 of the sectors?
It will. Maybe I should have put on my leather jacket today because we are coming up with a new product. I have been begging Liam for being able to promote this for a while. There's still 1.5, 2 months until it's completely ready. So, but what we have made, and when I say we, it's Liam and his wizards. They have made this what we call a stock map, and I'll not go in depth with explaining it. But basically, we choose a benchmark. In this case, the S&P 500. That is the middle here. And then we measure how relatively strong, for instance, different sectors are towards the benchmark. So up here, we have the XLB, which is the ETF that covers basic materials. And as we can see, that is going into this quadrant called improving. That means that the relative strength is picking up. It's getting stronger and stronger and stronger towards the benchmark. And what we are trying to do is we are trying to pick sectors, stocks, industry groups that are running faster than the benchmark, and that have shown us already now that we can actually pick some turning points really quickly. What we do then, by the way, we have materials, we have energy here that is also moving towards the leading quadrant, and then amazingly enough, we have the tech XLK that have been moving down for a quarter or so. And if you remember the NVIDIA chart Liam showed just before, it actually showed that NVIDIA had been moving sideways for a quarter around that. So that is what we see here. What we do then is we look at the materials and we dive down and we say, what stocks are then in this sector? And then we pick all the stocks that are running faster than the S&P 500. That could be something like Corteva here. Then we dive into the stock and say, all right, just as we always do, is it a good quality? Yes. Is it priced correctly? Well, that might be a bit, take a bit more exploration to see if it is. And then we look at, are the big elephants starting to run after this stock. So this is a completely new tool that I think will completely blow people away when they get access to it.
I'm gonna hand Hans-Henrik a napkin here because he needs to sort of wipe his mouth because he's drooling a little bit. That feature, Liam, that you guys have been working on, it's not available yet. It will be available as a premium service to members, but that's gonna be in a couple of weeks' time. We're talking 6, 8, 10 weeks out that we're ready to launch it fully.
Yeah. The key thing now, the stock map is done. We've been playing with it and working with it ourselves internally, and it's a fantastic. Hans has said it's a bit like the value chart for looking at stocks and screening stocks. It's very difficult to actually look at stocks without looking at this now to see whether they're moving up in the world or moving down in the world. What we're now working on is just that look and feel, so that it's very easy to say, okay, we're going at a top level on a sector or an ETF or a index. Drill down into that, click down, see the sectors, see the industries, see the individual stocks. So we're just trying to make that transition as smooth as possible for everyone, so it's really simple.
And this is a tool that will be available, as I said, to premium members. And that's how we do it. That's one of the reasons why you should have a membership of the MyStockScanner.com, is to get into the toolbox and have everything for your analysis of stocks. One of the things that we would like to put to the Tuesday poll this week, and it will be up shortly in all the groups, in all the Facebook groups, is that we want to have you take a good look at gold and silver stocks. Now, I used Barrick as an example here of stocks. It's a stock that we've been in the 3-point playbook as well. But there are other gold and silver stocks out there, and there's no doubt gold and silver is not going anywhere. Record highs all over the board.
I was just going to say, it is going somewhere. It's going up. It looks like, and you look at the reasons for that. Venezuela was the real kicker yesterday. That people are looking at the world economy and saying, actually, in uncertain times, we need a safe haven. So the dollar has been that in the past. The US government is working very hard to make sure that's not a safe haven anymore, in our opinion. So excuse me. So people are looking at gold and silver and saying, it's a store of value, so we can put it in there. Sorry.
All right.
The golden voice.
I'm getting choked up about it now, just thinking about all that.
If I may add, we have chosen a lot of stocks, and people can choose in the polls today, and that is both gold and silver. It's a combination of them. Also, because silver is the industrial material of them. That is the one that is in most demand for solar panels, for electrical vehicles, and so on, especially with new batteries coming out.
The biggest demand is for circuit boards and
circuit boards, chips, exactly. Which is also why it might be a problem that China is cutting off a big part of the world's supply in silver. It's almost like a rare earth mineral.
There's a lot of things, and there's always news, and there's always knowledge to pick from you two guys. You guys can talk for hours. There's no doubt about it. I hear it every day. But we only broadcast for about 25 minutes. Maybe that's okay. But listen, guys, I said in the beginning of the show that the 75.6% was a number of the day. And I'm going to put up a world map while we talk about it, because 75.6%, that was what the Korean index, the Kospi, went up in 2025. That's the good thing about year's end, is that you get all these charts. But if we look to that charts, and these are the major global indices that we're looking at, Canada came in second, 28.3%. Nikkei, the Japan index, came in at 27.9%. FTSE, if we should mention it, since Liam is here, came in with 21.5%. It beat out the S&P 500, 16.7%. And even the French index, that didn't do too well, came in at 10.4%. Pretty good. Let's just mention, 3-point playbook portfolio came in at 34.48%. And then finally, just to mention it, Copenhagen index, 0.93.
I think sound is cutting off here. I can't hear what you're saying, Jesper.
Less than the FTSE, yeah?
Yeah, a little bit.
I'm just checking that's just to make that obvious.
But
the
guys,
I was going to say, the other interesting thing, your world map had the US and Greenland. Was there any reason for that? Or
no, they're going to be wrapped in a red and white flag soon. But listen, guys, is it surprising that Korea took off like this? 75.6%.
Not really when you look at the constituents in the index. There is tech, it's chips, it's batteries, it's everything that have been moving in 25. I was a bit surprised to see it was that much, but looking at the constituents, that makes sense.
And then we're finally sort of getting back to normal in that sense that Christmas and New Year's is behind us. That means the economic calendar and the earnings calendar start churning away. We get a little bit tomorrow in the US, Constellation Brands, Jefferies Financials, Albertsons, Marks and Spencer, and Applied Digital are coming up with numbers. And then on Friday, the big one in that sense that we have non-farm payrolls. What are we looking forward to here? Is that something that can move the markets?
Well, we're looking forward to three letters, and then N and F and M P, non-farm payrolls Friday. That is what will determine if Fed can lower the interest rates. And right now it doesn't look like that. I think it's the 28th of January. They have their next meeting, so that'll be interesting.
We shall see. One thing for sure is that Liam Flavelle is with us again on Thursday because we have Thursday Tech. You know what you're working on? Are you gonna? Is it gonna be leather jacket fashion, or what are we taking in here? Legos, maybe?
I think I might give Lego a miss. Nvidia and AMD. The CES conference came out with quite a lot of interesting stuff, and we'll cover it more on Thursday on what they announced, because it's not just chips for data centers. They're basically looking at world domination.
Yeah, I saw the pictures of Jensen Huang out with a computer that looked like Wally from the Hollywood movie almost.
Yeah, and the only Wally we've got is Hans-Henrik here. So
yeah, but it isn't. But and we're not going to tell him to phone home. He is home already. But anyhow, guys, I can feel that we're getting non-serious, and that's fine. So maybe we should ask our viewers to bring us back to normal seriousness in that sense. You can always write us, FOMO@MyStockScanner.com. We'll take up your questions here on the show, or we'll answer you directly. That is today's scan on MyStockScanner Live. Remember, every stock comes down to quality, upside, and timing. Invest smarter, stress less, and we will see you guys in Danish tomorrow at 12. Liam, we'll see you on Thursday at 1 o'clock. You guys have a good one. Happy investing out there.